Welcome to today's Explainer. You know, if the cryptocurrency market right now, July 26, 2026, were an anime, we would literally be right in the middle of a massive, high-stakes tournament arc. What we are witnessing is an absolute titan clash. On one side, we have this heavy, looming dread of macroeconomic pressure, and on the other, a surging, relentless wave of institutional adoption. It's a very tense, delicate equilibrium, and today, we're going to break down the colossal forces fighting for dominance on the charts.
So here's our battleground map for today. We'll be looking at the tense market equilibrium, the clash between macro fear and crypto growth, the ongoing exchange industry shakeout, retail's sudden return to meme coins, Ethereum's silent victory, and finally, how to navigate the next move.
Let's kick things off with Section 1, the tense market equilibrium. We're dropping right onto the battlefield to analyze the heavy suspense gripping the market today.
Right now, the total cryptocurrency market capitalization is hovering right between $2.2 and $2.28 trillion. It's a massive number, sure, but the momentum is completely in a holding pattern. Bitcoin, the undisputed heavyweight champion of the space, is trading sideways in a super tight corridor, bouncing between $64,000 and $66,000. Following a really tough first half of the year and that plunge down to $58,200 back in June, the market has recovered, but honestly, it's holding its breath.
And this next metric brilliantly illustrates that tension. The Fear and Greed Index sits at exactly 27. We are firmly in the fear zone right now. Now, even though we're up from the extreme fear we saw just a month ago, this metric tells us the broader investor base is highly wary. All that dry powder is just sitting on the sidelines, waiting for a signal.
Moving to Section 2, macro fear versus crypto growth. To really get why everyone is so fearful, we need to look at the two massive opposing forces creating this gridlock.
We've got a massive clash underway. On one side, intense macro fear is weighing down all risk assets. We're talking inflation, global conflict, central bank anxiety. But pushing back hard on the other side, a staggering wave of institutional and AI-driven growth that's fundamentally pushing the industry forward. Let's look at the heavy hitter on the fear side first.
That number is $97, and it represents the price of a single barrel of Brent crude oil. The macro fear right now is heavily driven by geopolitical conflict in the Red Sea and the Strait of Hormuz, which has sent energy prices soaring by nearly 27% in just 2 weeks. So why does crypto care about oil? Well, expensive oil fuels inflation fears. And inflation fears mean the Federal Reserve, which happens to meet this coming Wednesday, might just keep interest rates high. High rates make risk assets like Bitcoin, which don't pay a yield, way less attractive to traditional investors. That directly suppresses the value of your portfolio.
But fighting back against that macro dread, we are seeing some absolutely incredible institutional expansion. Rowe Price literally just launched TKNZ. That's the very first actively managed multi-crypto spot ETF, holding a basket of assets including Bitcoin, Ethereum, and BNB. Meanwhile, looking internationally, Russia's largest bank, Sberbank, is launching a crypto trading platform by December. Argentina is easing restrictions for mutual funds, and payments giant Wise is actively pushing for a U.S. charter to lower cross-border costs. Traditional finance is laying down some serious infrastructure right now, totally regardless of the short-term price action.
Which brings us to Section 3, the exchange industry shakeout. Let's shift our focus from the macroeconomic skies down to the actual skirmishes on the ground.
The crucial point here is that while traditional financial giants like Rowe Price are expanding into the space, the crypto-native landscape is rapidly consolidating. Centralized exchanges like BitMart announced they are officially winding down operations due to unfavorable market conditions. In fact, they are suspending new deposits today, July 26th. BitMax, a total veteran of the derivatives market, is completely closing down by September. Even the DEX aggregator Odos is permanently shutting its doors this week. Liquidity is concentrating, and the smaller or older players are just being forced off the battlefield.
Let's dive into Section 4, Retail's Return, Meme Coins. Because while the platforms consolidate and the institutions build, you have to wonder, what is the everyday retail trader doing? Well, they're embracing chaos. Just look at this stark contrast in daily performance. The sudden wind down of the BitMart exchange caused its native BMX token to plunge a brutal 55%. Yet, on the exact same day, retail favorite Shiba Inu, or SHIB, surged 25% on a massive 782% increase in trading volume. I mean, why worry about global interest rates when you can trade dog coins, right? And another asset, Yule, absolutely exploded by 70%.
This immense contrast begs a really important question. With the broader market essentially paralyzed by fear, like we saw with the Fear and Greed Index at 27, is this a true return of retail investors, or is this just short-term FOMO, gambling on memes while the rest of the market waits for the Fed? The data definitely suggests it's the latter. Capital is rotating into high-risk, high-reward narratives rather than lifting the market as a whole.
Next up, Section 5, Ethereum's silent scaling victory. Speaking of capital rotation, while Bitcoin consolidates,
we are actually seeing Ethereum quietly achieving massive fundamental victories right behind the scenes. Showing a very clear rotation of capital, Ethereum SPAR ETFs saw exactly $103.9 million in net inflows last week. This completely outperformed Bitcoin ETFs, which actually suffered around $95.5 million in outflows over that exact same period. Institutional money is actively rebalancing.
Let's look at how this builds fundamentally. Investors are heavily eyeing Ethereum's undervalued status right now. It's currently trading roughly 17% below its realized price, which is the average cost of all circulating coins, sitting around $2,300. Historically, this is often a cyclical bottom. Combine that with the fact that Ethereum's weekly transaction volume just hit a record high of 1.8 million. This is driven by Layer 2 solutions like Base and Arbitrum, all while maintaining record low median fees of less than a single cent. It's a silent scaling victory that institutions are absolutely noticing.
Finally, Section 6, Navigating the Next Move. As the dust settles on today's action, we need to map out exactly what's going to tip this market out of its tense equilibrium.
Here are the impending boss battles for the market over the next few months. It all kicks off with the highly anticipated Federal Reserve meeting this coming Wednesday, July 28th and 29th. Moving into the fall, we've got new Russian crypto regulations taking effect on September 1st, followed by the official closure of BitMart on the 23rd. By the end of the year, we have the Sberbank platform launch in December, and then early next year, January 31st, the final nail on the coffin for BitMart's complete closure. The landscape is shifting incredibly fast.
Based on the analysis from our sources, investors are looking at 3 potential scenarios for the immediate aftermath of this week. In the base scenario, which is considered the most likely, the Fed maintains rates, and Bitcoin just continues to range between $60,000 and $70,000, perfect for dollar cost averaging. In a positive scenario, geopolitical tensions ease up, oil drops, and steady ETF inflows return, pushing targets past $75,000. But in the negative scenario, if energy inflation forces a rate hike or oil spikes above 110, we could easily see Bitcoin drop right back to its June lows of $58,000. Understanding these 3 paths is exactly how you protect your portfolio heading into Wednesday.
So we have the macro dread fueled by global conflict, locked in combat with a relentless wave of global institutional adoption. Everything is perfectly balanced on a knife's edge. With all these colossal forces at play, which path do you think the market will take when the Fed speaks on Wednesday? That's all for today's Explainer. Keep your eyes on the charts, and we'll see you next time as this titan clash continues to unfold.